Hello guys, it's Max here from Daily Market Movements and welcome to video 1, step 1 of the 5 videos that I'm going to do for you with regards to the 5 most important trading indicators that you guys should know when looking and analyzing day trading charts. So this video I'm going to be focusing on support and resistance. So support and resistance is by far one of the most basic, most important and most simplest trading indicators that you guys should know how to use on a daily basis. It's used by some of the most professional and successful traders in the world. I use it myself every single day. I'm not saying that I'm one of the most successful traders of all time, because I'm far from it, but I am a profitable trader, and I do use this strategy every single day. When I wake up, I just look and I open up my charts, and this is one of the first things that I look out for. So I'm pretty confident that the large majority of you guys watching my videos today already have a trading account, a live trading account, which is ready to start trading with. And when you set up that account, I'm pretty sure you would have seen your broker insert a statement at the top or the bottom of the website claiming that a total 76% of day traders lose money, which is a incredible amount of people lose money day trading. And I personally believe that the reason for this is because people skip this such an important indicator of support and resistance level. I think that they get lost and they try and overcomplicate it by looking at the Fibonacci. They skip this step and think, oh, that's easy, and they go towards the moving averages, and they try and get really complicated and complex with trading, where, to be honest with you, trading is actually a very, very, very simple task. You just have to basically look at such simple indicators like this one that I'm about to explain to you today, which is the support and resistance levels. So before I take you over to the charts and explain it a bit better, what is support and resistance? It's very simple. The short terms for it is a roof and a floor in the market. In between the roof and the floor of the market, you have the price, which moves up and down. The roof is simply a level in the market which the price struggles to break above, and the floor is a level in the market which the price fails to break below. So why is knowing what a support and resistance level important? Well, it's incredibly important to know what support and resistance is, due to the fact you can then use these levels to place your entries or your entry orders, and you can create that really good win to loss ratio. So I am going to take you over to the charts now and show you guys in depth what to look for when trying to find a support and resistance levels, and how you can use them and adapt them to your trading charts. So if you just come with me, and I'll take you over to the graphs right now. So guys, over here on the graphs now, in front of us we have the British pound over the US dollar, and the graph in front of us represents the previous 6 months of price movement, and as you can see, it has been rather flat around this area here for the first 3.5 months, and then we did encounter some volatility where we had a steep move to the downside, and then the market surged back towards the upside, and in the past month we have been rather flat again. So going back to the previous video, I explained the theory of the support and resistance level. So I'm just going to try and draw it just so that you can have a visual sense of it, as it might make it a bit easier. So let's just pretend on this bit of white graph here, let's just pretend that we had a stock movement which has gone up the first couple of days. It's gone back down, you know, it kind of went back up a little bit, declined, went back down again, and then it went surged all the way back to the top, come back down, went midway, and then we went back up again, and then we plummeted all the way back down towards the downside, and then we ended. So let's just say that this is the price movement of the past month of the British pound US dollar. So a trader like myself would then look at these levels, and we would try to identify the floor and the roof in this market, so the support and the resistance levels. So straight away I can identify that the resistance level of this market is as of following. As you can see, the market, when it first started, it tried to surge. However, this resistance level rejected the price movement, and as you can see, sent the market a lot lower. And then, as you can see, a couple of days later, we then tried to target this price here again, and as you can see, the roof of this market then rejected the price and sent the market lower, and then the bull stepped back into the market again and tried to push
the British pound US dollar higher, and as you can see, once again the market rejected the price movement and sent the market lower. So as you can see, I have now identified the roof, which is the resistant level of this market. Now I'm going to identify the floor in the market. So the floor is the exact same what we just did with the roof, however it will be with the bottom of the market as it acts as the floor. And as you can see, I've now identified the floor in the market. As you can see, when we got rejected up here towards the top side, we then got rejected and it pushed the market all the way down to the bottom. However, the bulls stepped back into the market and managed to push this price a bit higher. So we did find some support at this certain price level. The market then tried to rally back towards the upside, however it got rejected and then got pushed back down, and then the bulls stood back into the market, and then we also found some support and we sent this market back towards the upside, where then we found some resistance in the market. It's as simple as this. And then the same thing happened here. The bears then pushed the market back down and the bulls kind of stepped back inside, and then we found some resistance in the market, which then sent the market lower back towards the floor in the market. So as you can see, the floor and the roof of the market, so the support and resistant levels, it kind of creates a nice channel which the market can then freely move in between for a certain period of time. So what I'm going to do now, I'm just going to get rid of all of these drawings that I've just done, and I'm going to show you on the real chart what it looks like. So back here on the live chart now, as I mentioned before, we have the British pound over the US dollar chart. So I'm going to try and go through with you step by step how I would look at a live trading chart and draw a supportive and resistant level. So first of all, I'm going to draw the resistant level in this market, and as you can see, on 3 separate occasions the market has struggled to break above this price of 1.33. I'm just going to highlight that now with a nice green circle. As you can see, the first attempt we tried to break above was here. The second attempt was a couple of months later here, and the third attempt was just a month or so ago, where the price where the market rejected this price movement and the bears stepped back into the market and rejected this level. So the market has failed to break above this area, and as I mentioned in the previous video, this is what causes the roof or the resistant level in the market. Now it's time to draw a floor in the market. So as you can see, the floor in the market is here. This is the bottom floor, and this is where the market has actually found support and bounced off and found some support, where the bulls have now stepped back into the market and overtaken the bears and brought this market back towards the upside. So why is it important knowing where the supportive and resistant levels are? Well, it's incredibly important due to the fact it helps you and allows you to know where and when are the best times to open and to order trades. So I'll give you a great example here. I'm now going to place a green line for where would be a very ideal place to open a trade. So as you all know, you can short the market and buy the market, meaning that you can make profit when the market goes up, and you can also make profit when the market goes down. This is the beautiful thing about day trading. So as you can see, we are now in this channel. We have been rejected twice off this resistant level of that 1.33 area. So now we had moved all the way downwards and we had retested for a third time. So it would be a very smart idea, once we got rejected from this price from this price movement, to then open a sell trade. Why? Well, because we also know that the market did go as low as the 1.20 area, which would also be considered as a floor. So before that, the market actually went as low as this. So let's just wind it back a bit. That would have been your floor. So I'm just going to highlight that with a green circle as I did with the others. There we go. So that would have actually been your floor. So when the market got rejected from this 1.33 area, it would have been a very good idea to then place a short where I placed that green line targeting back at this floor. And as you can see, the market did exactly that. When we got rejected from this 1.33 area, we then moved all the way back down and we fell to as low as 1.20, which was the previous floor, and we even broke below there. And then that's what has then created this new floor at the 1.15 area, where we then found a bounce in the market. And then when we got that bounce, this floor, this previous floor then actually becomes the roof. So when you're trading below this floor, as we were here, this then becomes the roof. So once we got the bounce at the 1.15 area, you could have placed some buy trades. If I just place that here, and I'll just put that green, you could have bought the market on this green bar here, targeting this price level here, which was the previous floor but now the roof in the market. And as you can see, we got there. And then once we broke above the roof in the market, it's very simple. You would then target the previous roof in the market, which was that 1.13 area all the way up here. And as you can see, the story is still yet to be told, but I'm sure that many traders right now will have long-term trades targeting this 1.13 area. But the beauty about learning the resistant and supportive levels is that it allows you to, when opening a trade, to have a great loss to ratio. For example, if you would have placed this trade up here, you could have had a sell. So if I just get another line, which is where I would put a stop loss for my trade. So if I would have sold the market when we got rejected up here, I would have put a stop loss just above the floor of the market. So if we did break, for example, if we did start to go down and then we did break above the floor, if we broke above the roof of the market, this would then trigger the stop loss, as it would be considered as a breakout. So I would put a stop loss just above the roof of the market, and as I mentioned before, the green line indicates where I would have entered the trade. My price target would have been, if I do another line, which will be a blue line, that will indicate where I was targeting for my trade to take profit. So I would have targeted where the floor of this channel that we've been trading in is. So I would have had, as you can see, this could be a potential 7-to-1 win-loss ratio, because I'm risking that to gain this. So the win, the reward from this trade is a lot larger than the loss, and in trading this is very important. Having a good win to loss ratio and a good risk management is crucial if you do wish to become a successful trader. So this is one key feature that every successful and profitable trader has, is that they have great risk management and they always have a great win to loss ratio. And this is what the supportive and resistance levels can help you achieve when becoming a day trader.
So guys, there you have it. Video 1 of 5 complete. I've just explained to you what support and resistance levels are and how to adapt them to your trading charts. As I mentioned at the start of this video, please do not underestimate this indicator. Although it's very simple, it's extremely important in order to become a successful trader. So for the second video, I'm going to be explaining about trend lines. So trend lines is very similar to support and resistance lines. However, they are slanted whenever a market has a trend, whether it be an uptrend or a downtrend. But I'll explain more of that on the second video. So you can find the second video if you just click here in the corner, and that will lead you to my second video where I will explain more about trend lines. I hope that you've really found this video that I've done today really useful, and that you've learned a lot and it helps you become a successful trader. So thank you guys, please subscribe to my channel and give me a thumbs up for the video. Thank you.